Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go through some live mortgage rates, and then we're going to do a deep dive into SBA loans. We haven't done this in quite some time, so this will be a great topic here to go over today. We got the chat up on the screen. Go ahead and drop a comment there in the chat as you tune in. We're waiting just a couple minutes here to go live on all the different platforms. Hope everybody had a great holiday, ready to get back to it here this week. All right. So it looks like we're live on all the different platforms. We'll go ahead and get it started here. What we'll do is we'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions that you have in the chat as we go through here today, and Jose would be happy to answer them for you. So, welcome everyone. My name is Kyle Hershey. I am the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern on this show is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. Today's loan type is going to be SBA loans. So something very unique and something that borrowers can definitely take advantage of, but something very specific as well. So Jose will take us through that here shortly. But before we do that, we'll do what we do every morning, which is look over the rates. So Nick, if you're ready, let's go ahead and pull up the live rates and see what they're looking like today.
All right. So we had some bad news, which is good news for rates a little bit. So some downward momentum today looks good. It is July 5th, just after 11 a.m. So all of our standard programs have their first round of live rates here. And we will compare the APRs across the programs with a basic scenario. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with our team members. We have over 300 loan officers to help you out. The scenario we'll use for today, so we can compare across all the programs, will be a standard single-family home. We'll do a $500,000 purchase, $400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. And we use an estimated 760 credit score and an estimated 40% debt to income ratio for all the demos here. So let me go ahead and share my screen and make it big. And we'll check out the rates for today. So first options, typically the most common option people think of when they're thinking of a mortgage, a 30-year fixed conventional mortgage for a primary home. Rates today come in at 6.49, final APR at 6.828. So again, we see some downward momentum, which is good. And if for any reason our customer doesn't qualify for a conventional option, typically the next option we want to present is an FHA option. FHA programs allow more leniency on credit issues, as well as a much higher debt to income ratio overall. However, it does require upfront and yearly mortgage insurance. The rates today for FHA come in at 5.75, and with all of the fees included, the APR is 6.736. So notice if our customer qualifies for both, FHA could be a touch cheaper, but does come with that upfront and yearly extra cost. So our customer could compare those. And our customers that need to use FHA, definitely a great option. As you can see here, the APR is very similar. Now moving on to our VA options. We did an episode about this earlier this week for all the cool options. For the basic scenario here for our eligible active service members and vets, rates as low as 5.99 today. Final APR 6.301. So as we always say, for anybody that is eligible, the VA programs are typically the best, as they beat all of these other APRs substantially and have a lot of other cool perks you can check out in those episodes we did earlier this week. And now our final agency government option, USDA. USDA programs only work for USDA areas. Those are the rural areas of the country typically. If our customer and the property qualifies, definitely a great option. USDA comes in at 5.875 and a final APR of 6.617 with all of the fees included. So notice if our customer is shopping in one of these USDA areas, they will typically be comparing to an FHA, which USDA beats a little bit here, as well as a conventional, which USDA beats a little bit as well. So great option for those looking in those areas. Now that rounds out our standard options that any other bank or lender will have. Unfortunately, if our customer doesn't qualify, many other banks or lenders have to deny them. But that's where we have 5,000 other options, starting here with our 30-year fixed non-QM alt doc option. So typically if our customer doesn't qualify for conventional, for some reason can't get the documentation to work, and we need to use alternative docs such as bank statements, 1099s, P&Ls, etc. We have hundreds and thousands of different options. The best option here for an alt doc, typically a bank statement, comes in today at 6.99%, final APR 7.309. So notice when we're comparing conventional, customer that can't quite qualify for a standard program, it's still within a half a point of conventional to use alternative docs, which is a great option for our borrowers, especially when many other banks or lenders have to deny that borrower. Now moving on to our investment properties, definitely lots of flexibility and different programs here. First up, our 30-year fixed alt doc, again, a bank statement or similar for an investment property, comes in today at 7.375 rate, final APR 7.705. And we'll compare that to our other investment property options. Remember, government programs, USDA, FHA, VA do not work for investments, but we do have our conventional option. So 30-year fixed conventional for an investment property comes in today at 7.25, final APR 7.611. So notice it beats alt doc a little bit today, but definitely, as usual, recommend all our investors to check out our favorite programs, our DSCR options. DSCR stands for debt service coverage ratio. No income is used, no employment is used. Very simple loan program where we simply use the estimated rents from the appraisal to determine a DSCR value. If the estimated rents can cover the expenses, aka the property does cash flow, that's a ratio of 1 or higher, which is preferred. For all the demos here, I used a ratio of 1.5 so that we could see all the different programs pop up. First up here is our DSCR option with a 3-year prepayment penalty, which is standard. Rates come in today, 7.124, final APR 7.418. Notice that beats conventional. Absolutely amazing. And for our 5-year prepayment penalty option, some of our programs do allow that, and the rates get even better. Rates as low as 6.875, final APR 7.188. Again, beating conventional substantially. And the last option we'll show here quickly is our no prepayment penalty option. Some states don't allow a prepayment penalty, and some investors don't want one. No problem. Rates as low as 7.625. Final APR is 7.986. So notice with a no prepay, it's a touch higher than conventional. Still, most investors will pick a DSCR loan over a conventional loan for much less documentation and ease. But always recommend to check out the prepayment penalty options to sweeten the deal. And the final two things we always go over are our second mortgage options. So these are new non-QM loan programs for the market that we're in right now, where a lot of customers have a low rate first mortgage, but still need cash out. Typically, the only option before was a HELOC or some kind of variable rate second mortgage, but these 30-year fixed second mortgages are definitely preferred here. So for a primary home, we can get cash out without touching the first mortgage for rates as low as 8.125 on the second mortgage. Final APR comes in at 8.278. So this is a great option for our borrowers that don't want to touch that first mortgage and still get cash out. These are also non-QM programs, so we can use bank statements and similar on these programs. And for an investment property, same program, 30-year fixed second mortgage. Not many HELOCs even allow investment properties, and it's definitely higher rates as well. So a 30-year fixed second mortgage to get cash out, rates come in at 9.875 today. Final APR 10.17 to get our investors cash out without touching that first mortgage. So those are great options that we go through every day, but let's check out our topic for today, something that we can't do on the live pricer. These are programs from the SBA, the United States Small Business Administration. So Jose will give it the formal definition here, I'm sure, of what these loans are and how we can use them. Definitely not something we can price instantly. These are going to be variable based on an index because these are government programs, but definitely great options. Jose will show you all the crazy LTVs and options that we have when we use these programs. Can't do them on the live pricer, but definitely reach out whenever you have these scenarios that Jose is going to explain. So Jose, what can we use SBA for?
Oh, good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. The Small Business Administration was created to foster business ownership in the United States for U.S. citizens and permanent resident aliens only. No non-permanent resident aliens nor foreign nationals will qualify for an SBA loan. Now, SBA loans are for purchases, refinances, and actually even when you do not own real estate, there are actually options for leaseholds on SBA because it is for business ownership, fostering business ownership, not necessarily just the real estate that is associated with the business. When there is real estate associated with the business, or for any SBA loan, for that matter, the owner has to occupy at least 50% 50.01% of the space of the location. That is the key, as SBA is for basically owner occupied properties only. Now, if you occupy at least 50.01% of the space, that will be considered owner occupied. You can rent out the other remaining space, as long as it's part of your business plan that has to be provided to the SBA so that they can approve your loan. So let me go ahead and share the options. I have a nice, some nice options here for you today, especially this first one, which a lot of people do not really know that this exists, right? This is an SBA purchase, 100% LTV. Yes, you heard me correct. We do have 100% LTV commercial financing via the Small Business Administration. Now, the catch to this option is that it has to be an already existing business, because SBA does allow for new businesses where you provide your business plan, your pro forma, what you think your income and expenses will be. And if everything is really tight, they will approve it just on that. However, this option here is for an already existing business where the business minimum 2 years in business and currently occupies a space as a rental and is now buying a space for the business. Doesn't have to be the same space that they're occupying now. That's not the catch. The catch is that you have to be in business and already, proving that you can make those rental payments for at least 2 years. And then if everything else checks out in the underwriting of the loan, 100% financing will be possible. Again, like every SBA loan, you're looking at least 50.01% of the space occupied by the owner. Now, also SBA loans, like Nick touched on, are a variable rate product. The interest rate is going to be the prime rate, which is currently 8.5%, plus a margin that can be anywhere from 1.5% to 3%. And that will depend on the risk associated with the file. Yeah, so basically the quote I'm giving here is just estimating a rate. Prime rate is 8.5. So here we have 10.75, which is almost somewhere in the middle for this 100% LTV option. The more standard SBA loan is the 90% LTV option. This is the one where if you are a new startup business, probably the option that you would qualify under. Again, same requirements, occupying at least 50.01% of the space. And again, I'm just estimating the rate here at 10.5%. So this one would be prime plus 2, whereas the 100% option, I put it at prime plus 2.25. Now, another interesting option for SBA is to refinance business debt, right? Doesn't have to be an SBA to SBA refinance. We're just talking about business debt. Now, this loan can be as short of a term as 10 years if no real estate is involved, right? So if you're just refinancing pure debt, they're only going to give you a 10-year amortization. And if real estate is involved, it is a 25-year amortization. I think I forgot to mention that on the first two, the 90% option and the 100% option, is that it is always 25-year amortization when real estate is involved. Again, the rates are going to be prime plus anywhere from 1.5 to 3%. Real important to have a solid business plan, right? That's the key here, solid business plan. So again, I'm just estimating this rate here at prime plus 2.25 at 10.75%. And the last option here is very interesting one, business expansion. Now, this could be owned real estate where you own the location, or this could be a leasehold where you're renting the space. Many people aren't aware that SBA loans are possible even if you do not own the space. In this case, let me give you the scenario here. Restaurant operator may need to expand a current location or move into a bigger location and build it out, right? Now, how many times have you not heard about those? Well, SBA can do that even if it's a leasehold. Again, solid business plan is essential. The rates are going to be based on prime plus anywhere from 1.5 to 3%. So again, here I'm just estimating the rate at 10.75, which would be prime, which is 8.5% plus 2.25. Now, on the plus side, the rates will be going down. So if you do lock into an SBA loan now, rest assured that as the prime rate tracks downward, your interest rate will also track downward. So don't think that you have to wait sometime in the future for rates to drop to get that SBA loan if you're getting a good opportunity on the property or if it's an essential move for your business. So definitely look to the mortgage calculator for all of your SBA loan and commercial loan needs.
All right. Thank you, Jose. Let's see here. Let's check out if we have some questions here in the chat. So it looks like we have a question asking, I have a client who somehow obtained an SBA loan on his primary residence. It's in his business name. Do we have this option also? Well, nobody has different options, right? The SBA is all the same. Nobody has some kind of special SBA programs, right? Not sure exactly how that happened. And he obviously worked into, it's probably maybe a live work type situation. What were you going to touch on that, Jose?
Yeah, what the SBA does on occasion too is that's how they go to these high LTVs too. Sometimes is they will cross collateralize properties. So it's common that you could have an SBA loan and they're gonna, depending on the risk associated with the loan, right? And this could be for a leasehold or whatever. They need collateral because they may think because of the business plan, the credit, or whatever other factors of the loan pose a higher risk. They can cross collateralize primary residences. So it's not really that they're lending on the primary residence. They're just saying, okay, you got the primary, it has equity. That's what we're going to use as additional security for ensuring that the loan is repaid.
Now, I would guess, Richard, that was, like Jose said, like an unsecured type of loan, right? There was no real estate for the business, like the restaurant example, right? So he needed money for his restaurant. They have to lean against a property since they gave them money for the restaurant and there is nothing to lean against on the restaurant, would be the typical scenario where Jose mentioned that they'll give you the money, but the collateral has to be in other ways.
All right. Okay, I don't see any other questions, so I think we can wrap it up. But definitely great programs there, and interesting, like Jose said. You don't have to wait for this, right? There's no, you don't need to wait on the interest rates. They're going to vary and go down as they go down. So, great topic here. Thank you, Jose. Remember, we do this at 11 a.m. Eastern every weekday, where we go through the live rates and then do a deep dive into a different topic. So we will be back next week. We'll see you all Monday, 11 a.m. Eastern, for the next episode.